If you think of a credit card as free money, it's time for a reality check. Using a credit card is really just taking on debt. And if you're not careful, that debt can spiral out of control. But here's the good news. When you use a credit card responsibly, it can actually be a powerful tool for managing your finances, building your credit history, and even unlocking some handy perks. So, how do you master your credit card and avoid the debt trap? Let's break it down with 12 essential rules. First, let's talk about why you might want to use a credit card in the first place. There are a few financially sound reasons. Maybe you need an emergency buffer for unexpected expenses, or you want to spread out the cost of a big purchase over a few months. Perhaps you're looking to build your credit history, or you need a secure way to pay while traveling internationally. Some people even use credit cards strategically to consolidate high-interest debts onto a card with a lower promotional rate. But remember, for every one of these reasons, there's usually an alternative, like a dedicated emergency fund, a personal loan, or a multi-currency debit card. The key is to use your credit card as a tool, not a crutch. Now, let's get into the 12 golden rules for responsible credit card use. Rule 1. Always pay your full balance every month. This is the only way to take advantage of the interest-free grace period and avoid costly finance charges. If you only pay the minimum, you'll end up carrying a balance, racking up interest, and stretching out your debt for months or even years. Rule 2. Never miss a payment deadline. Late payments mean fees, a hit to your credit score, and possibly a higher interest rate. Set up automatic payments or reminders so you're never caught off guard. Rule 3. Keep your credit utilization rate low. This is the amount of credit you are using compared to your total available credit. Experts recommend staying below 30% and ideally under 10% to keep your credit score healthy. Rule 4. Know your card's annual percentage rate, or APR. If you ever have to carry a balance, your APR determines how much that debt will really cost you. If your rate is high, look for cheaper ways to borrow before you swipe. Rule 5. Review your statements and account terms regularly. Scan for unauthorized charges, errors, or changes in fees and interest rates. Staying informed helps you catch problems early. Rule 6. Don't exceed your credit limit. Going over triggers fees and hurts your credit score. Set up alerts so you know when you're getting close. Rule 7. Use rewards and benefits wisely. Points, cashback, and travel perks are great, but don't let them tempt you into spending more than you can afford. The value of rewards is always less than the cost of carrying debt. Rule 8. Only spend what you can repay. Treat your credit card like cash, not extra income. Stick to your budget and track your spending so you're never surprised by your bill. Rule 9. Avoid cash advances unless it's a true emergency. They come with high interest rates and fees from day one, making them one of the most expensive ways to borrow. Rule 10. Keep a secure record of your card issuer's contact info. If your card is lost or stolen, you'll need this information right away to protect yourself from fraud. Rule 11. Watch for signs of overspending or financial strain. If your balance keeps growing, you're near your limit, or you're relying on cash advances, it's time to reassess your habits. And finally, Rule 12. Monitor and negotiate fees. Know what you're being charged, and don't be afraid to ask your issuer to waive or reduce fees if you're a good customer. Remember, your credit card should fit within your monthly budget, not stretch it. If you want an easy way to manage up to 4 credit cards, try the MyFriendlyBudget spreadsheet. It's simple, packed with features, and available in 8 languages. With these rules in mind, you can make your credit card work for you, not against you.